for more on that and South32 and more. Peter O'Connor joining us from Shaw and Partners. Peter, very good afternoon to you.
Good afternoon.
I know you're focused on mining. Have you had a chance to have a look at what's happened in the energy sector just as far as Ampol and Viva are concerned?
I haven't. My wheelhouse is pretty much right here, and that's over there. So no, I haven't. It's outside my domain, my wheelhouse. So can't give you any intel on that one. Sorry.
All right, fair enough. Well, let's stick to South32. Of course, we're seeing a bit of divestment here in this space. Whitehaven also is another one to look at. Just talk us through what's going on with South32.
South32 announcement today, it's a good announcement. It's a good step forward. It's been a long time coming. They announced or flagged this direction they were heading in with divesting their coal business about 2 years ago. It's been a slow, grinding process to get it through all the regulatory approvals, which they got their final one over the weekend, which is from the South African Treasury. And with that, they've announced their completion date, which is 1 June, which is only 2 weeks away. So it marks a move out of a large business in South Africa, in coal as well, so there's ESG ramifications, but more importantly, it's the transition of the company to a base metal focus going forward. So the development projects which sit in the pipeline behind this divestment are largely focused on base metal, so it's definitely segueing into a different model than it has been in, and importantly, it frees up a lot of capital, which will give the board the opportunity to revisit their capital management program. So the South African coal business consumed capital on an annual basis. It took about 150 million, or about 25% of the capex spend of the company, but it also had a large liability sitting on South32 balance sheet, which was for future rehabilitation for that asset. So now that they'll be gone from June 1 and the loss-making business is well gone, even though they've got very little payment for that, it frees up a lot of capital for South32. So we do expect the next step from here is a capital management update. That should involve an extension to their current share buyback plan, which runs out through September, which they're about 90% of the way through buying at the moment, and they're in the market buying most days. And also could lead to a dividend hike or a special dividend at the full year result, which is in August. So that's pending as well. But more importantly, it's this segue into a new direction for the company and quite a few development announcements over the next 3 months in terms of where they're going in that base metal space, be it in America or in Australia. So South32 is starting to look different, will behave differently, and cash will be coming back, continuing for shareholders, probably in a buyback form as well as some dividends. So good story, good development, and it's not moved a lot on the day, but I think when the market digests this, they'll like what they've seen.
Yeah, good enough to put into your portfolio today as a new buyer, Peter?
Absolutely. Yeah, I do. It's I've liked it for some time, and particularly coming out of the March quarter review season. It was one of the better stocks. I named 4 which did really well. It was South32, Sandfire, Aluka, and Evolution Mining delivered really good results and had a good outlook, and so South32 fitted that category. I knew this announcement was coming, but we've been waiting so long we didn't want to get ahead of that. But even at today's price and looking at its peers, it's still relatively cheap. So it's sitting at a slight discount to fair value versus its reflation peers like Aluka, Oz Minerals, BHP and Rio, which are trading at about 1.25 times their fair value. So it's looking cheap relative to those. It's got tailwinds in its key commodity of manganese, which is up about 5% week on week. And this divestment, again, it'll free up capital for the company and take a lot of distraction away from the management and simplify what they're doing. So short answer, yes, I would add it at the moment. It's one of the our preferred picks, and it's in our portfolio here at Shaw and Partners.
All right, good one. Peter, we all know where commodities are going at the moment. That's up. Although I guess a question mark on iron ore, whether we're sort of at peak prices. And whether it really is a super cycle that we're in at the moment. We might have some answers just from the individual companies involved as far as the International Council on Mining and Metals, which is upcoming. What are you expecting to get out of this?
Yeah, we do. It's going to be a busy week. So it happens once a year at this time. So the key companies globally, there's 28 of them are in this International Council of Metals and Mining, get together. So it's a high-level strategic conference. That's at the end of this week. Preceding that conference is an investor forum. So 70 miners, of which the subset of 28 on this council, get together and they present to investors globally. And invariably, themes come out for the year ahead, be it capital spend, COVID, supply chains, capital management. And so we're expecting big things from that. It kicks off tomorrow night. It's a virtual conference this year because of COVID, but it will kick off with BHP and the big cap miners, Rio, Glencore, Anglo American and Vale in the first session at our evening tomorrow night, and that they'll set the tone for the conference, the week ahead, but also for probably the year ahead. And we're expecting it could be BHP giving an indication about their potash project, which will be their fifth pillar in that company. South32, I thought they'd announced the divestment of coal at the conference. They've done it earlier, so that will be talked about as well. But there could be steering in terms of where the iron ore market's going. Vale tomorrow night will be key to talk about how they're going with their restarted capacity and how they see the market, as will Rio Tinto as well. So in terms of the commodity outlook and the macro outlook, there'll be a lot of headlines to address that. But it does feel, to get back to your first point, the market's probably got a little bit ahead of themselves, both in iron ore and potentially copper in the short term, as those prices pushed higher in late last week, and some mixed data out of China today. But it's certainly still an encouraging backdrop going into the half-year reporting season, and dividends and capital management are going to be a key part of the discussion, just because of the amount of cash the companies are generating at the moment.
Peter, how are you looking at Whitehaven Coal? They have given an update pending on their Narrabri mine. So is it one that you still like?
I do, and in the short term it's been a bit painful because they've had a disappointing quarterly production update, which is just over a month ago. But we're expecting an announcement anytime soon, and they're presenting at this conference this week on Wednesday night. So we're hoping they either present and announce at that conference or before an update on what's happening at their Narrabri mine. That was the source of a downgrade in April just a month ago, and it related to a production delay, production shortfall, some coal price and quality issues which would feed into the June quarter and potentially into the September quarter. And we're looking for an update which will address some of the issues that they've faced and how they've progressed over the last month. The company's not distressed, it's not an intractable issue, but it's certainly going to take a quarter or so to resolve. The key issues there will be loss of production, but also a diluted price they're receiving at the moment relative to the benchmark. But the valuation is extremely cheap, and as they can deliver those milestones, which we're hoping one will be this week and potentially again in June, the gap between their share price and where they should be trading on all correlations, be it relative to coal price, their earnings, their net present value, should start to close. And Whitehaven should, in all things being equal, trade closer to $2.50 per share from where it's trading today. So it does look cheap, screens cheap. It is cheap today. They just need to address and de-risk from here. So hoping the announcement this week, it's binary, and the binary side of it's good, and that will be just that they're ticking along and moving in the direction they said they would a month ago. So yes, I like the macro side. Yes, I like the tailwind of coal price, and I think they can right the Narrabri mine over the course of this quarter, and the market should start to get behind that as they deliver that news flow.
Yeah, how are you looking at the coal market at the moment more generally, Peter? Obviously, longer term, it's all about decarbonisation, but short term, it's about global growth. So obviously, countries still need coal, and of course, you know, complicating the issue is just as far as that trade relationship with China is concerned.
Yeah, it's a fascinating concept or backdrop. Going back to COVID lows last year in March, it was all about global recovery and reflation, and part of reflation and recovery is energy demand, because we can't grow if we don't have energy. So if I took energy, not just coal, but all energy, be it LNG, gas, oil, and coal, uranium, they've all moved substantially higher over the last year. Coal came off its low in September last year, and coal prices doubled. Thermal coal price into Asia has doubled since last year in September. So directionally, short term, you're right. There's a cycle which is supported by that global growth and reflation thematic. Longer term, it's certainly on a slippery slide to a lesser demand profile as part of that decarbonisation. But we're going to have many supply and demand cycles as that slippery slide unfolds over the next decade or two, albeit it is accelerating. So coal market, it's on the right side of the curve. We do expect prices will likely push higher across the whole complex. Again, oil, gas, LNG, coal, and into the end of this year and possibly next year as well. So coal prices higher, tailwind for the coal equities. And despite that ESG influence at the margin and decarbonisation globally and the trend out of big miners out of coal, there's still a story and a valuation play in the space. And as I mentioned, Whitehaven's trading a deep, deep discount. It's probably the cheapest mining name that I cover at the moment in terms of valuation today relative to what it's truly worth. So a trade, not a long-term view, but certainly a trade on the side of the coal price, but also recovery in the Whitehaven from an operational perspective as well.
Peter, good one. Thanks for joining us from Shaw & Partners.
Thank you.